Morning, welcome to our webinar today. Delighted to be joined again today by Ben Grunberg, partner at Grunberg & Co. Welcome, Ben. And we're talking this morning about changes to the coronavirus job retention scheme. So the Chancellor announced changes a couple of weeks ago now. It's given us time to absorb those changes and understand how they actually work in practice. And Ben's going to take us through that process today. As with all of our webinars, for those of you that have been here before, if you're familiar with Zoom, you'll be familiar with the Q&A on your toolbar. If you have questions throughout the webinar, please post them using that Q&A tool, and we will try and answer as many as possible either through the webinar or at the end of the webinar. So I'll at this point hand over to Ben, keep an eye on the questions coming through, and come back at the end. So over to you, Ben.
Thank you, Jo. Good morning, everyone. I think we've got a couple more people just coming in, and we'll go ahead. So, what's changing really? As most of you are aware, the job retention scheme has been going on for a number of months now, and is effectively coming to an end at the end of June for the fully furloughed period. The scheme is closed to new entrants, and by that I mean employees who have not been previously furloughed can no longer be put on furlough. That came into effect from the 10th of June. So in essence, if an employee stopped working on the 10th of June, they can be furloughed for the first time from that point onwards, because they have to achieve the first 3-week minimum period before going into this new scheme in July. So in all aspects, it's been closed now for new employees. But for those who have previously been furloughed, they can be brought back and put back on furlough as and when going forward. So as of the 30th of June, as I say, is the last time when people can be fully, the end of the fully furloughed period. And for all submissions prior to that, you have a deadline to the 31st of July to get those submissions in. From that point onwards, you will not be able to submit claims for periods 30th of June and prior. As of the 1st of July, you can bring back employees on a flexible furlough arrangement, which this is the new changes the government's been announced and actually brought forward by a month, and something that everyone's been really after for a while. That comes with its own challenges and some changes to the legislation, some of the calculations, and we'll go through that. So the first thing to bear in mind here is that going on to a flexible furlough arrangement, again, is a change in contractual terms. Much like going on to furlough for the first time for an employee, when you go on to a flexible furlough arrangement, you have to get an agreement with the employee that they're happy to go on to this new arrangement and these new terms. In addition to this, you have to ensure that the agreement is consistent with employment equality and discrimination laws, as you would have done before, and keep a record of the agreement for 5 years. The other thing that you have to bear in mind, and the changes to the scheme, one of the big changes is keeping in touch of the number of hours the employee worked and the number of hours the employee was on furlough. So it's done by hours rather than days, which is really flexible in terms of the arrangement which you can do. So it's not about doing 2-day week or 3-day week. You can literally put an employee on a flexible furlough and have them working an hour a day if that's what you wanted. So really, really flexible, but just bear in mind that there are some pitfalls to be aware of. So the new calculation, the one major change here, and the one thing that you have to now keep a record of or calculate is the usual hours worked. So employees on a fixed contract, that's quite simple. And usual hours worked is you look at the pay slip before 19th of March, which is the cutoff date for furlough anyway. And you look at the pay slip and you work out what their contractual hours were for that period. And normally on a fixed hour contract, you're looking at contractual hours of 35 or 40 hours a week. And that's probably what you're going to be using. Again, you look at the last pay slip, so that might have changed. It might be different back then, but that is normally quite a simple calculation. For those on a variable hours contract, this is a bit more complicated. So similar to when calculating what their salary entitlement would be, you look at the average hours worked over the tax year, 1920, and then divide that by the the period in order to work out effectively the contractual hours, or you look at the same hours worked in the same pay period in the previous year. Now, these hours for variable employees include non-discretionary overtime and paid leave. So anything that would effectively contribute towards their contractual hours, that needs to be included. You take that figure that you've calculated and divide it by the days in the repeating work pattern. Now, all being well, for most of you, this will be 7 days, but there are some companies who pay employees, 4 days working on, 4 days working off, 4 days working on, and repeating, so forth. So that company would have an 8-day repeating pattern. But for most of you, you're probably working on a working week, in which case your repeating working pattern is 7 days, and you do include the weekends in that. Then you divide that by the 7 days, and you round it up to the whole number. So to give you an example, a company who employs someone who has an employee who works 35 hours in a month, you divide that by 7, and you multiply it divide by 7, which is the working period, and that's a 5-hour working week. To give you an example of the HMRC's example, is probably easier. This is the example they set out. So employees worked for F Limited since 2016, working 40 hours a week on a monthly salary of £3,000 paid calendar monthly. The employee was furloughed on the 25th of April and from the 1st of July is asked to return to work half days. Pay has not been topped up. There's no bonus, commission, or any other additional pay. Relatively straightforward claim here. So you take the 40 hours per week, you divide that by the 7 days in the repeating working pattern, and you multiply it by the 31 days in July. So that's 178 usual hours. This is the terminology, the usual hours worked, rounded up to the nearest full figure. So this is the start of all flexible furlough calculations. You work out the usual hours from that pay period, and then to work out the actual furloughed hours, you deduct from the usual hours the number of hours that actually worked. So kind of reverse, you kind of working in reverse here. So using HMRC's example, from the 1st of July, they were tasked to return to work half days. There are 23 working days in July, so on a 4-hour day, which is their half day, working on a 40-hour week, the employee is coming back to work for 92 hours in July. So to work out the furloughed hours, you take the 178 hours, less than 92 hours worked, and you get 86 furloughed hours for the month of July. Now, those of you who are kind of on the button here will see that the employees come back to work for half days, but 86 is not half of the usual hours worked. So in actual fact, there is going to be this swings and roundabouts here where, in essence, during the month of July, the employee will be at a disadvantage because the furloughed hours will not equate to half the number of hours in July. However, in August, the same principle would exist. Again, it's 31 days, so 178 usual hours worked. However, the number of working hours in August are much lower, so the employee will benefit in August from this arrangement. Unfortunately, these are the nuances of the HMRC calculation, which we have to adhere to, where unfortunately, some employees won't benefit from. So then working out the actual minimum furlough pay for this period. So as you're aware from before, the furlough pay is the lesser of 80% of the usual wages, or £2,500 capped, prorated over the furlough period. So again, if an employee is only on this flexible furlough arrangement for 2 weeks or half the month, then you prorate that £2,500 and the usual wage, 80%, to work out what that would have been for that period when they were on furlough. Again, with the flexible working arrangement, there is no real definition of when someone is coming off and on flexible furlough, but this is why it's really important to have this agreement in place when you put an employee on flexible furlough. It is normal when you're putting that employee on flexible furlough that you agree a defined number of hours they're going to be working, or defined what's called rotation. So, for example, you might say they're going to be working 2 days a week, and be working 5.5 hours a week. Whatever you decide, that is usually agreed at the start of this flexible furlough arrangement. It's nothing to say you can't change that, but it's one of the bases for getting an agreement with them and changing their contractual terms. But also it's important because when it comes to this calculation, you're normally going to be doing this calculation prior to actually getting your rebate from the revenue in order to ensure that you have the rebate to pay the employees, and therefore you want to have some sort of knowledge of what your employees are actually going to be working for that period in order to ensure you get the right rebate. So again, going through this example here, using HMRC's example, the employee was paid £3,000, so 80%, that's £2,400, which is below the £2,500 cap there. And we know that they were furloughed or flexibly furloughed for the entire month, so we don't need to prorate that. So you take the £2,400 and you multiply it by the number of days, the number of hours that they're furloughed, that's from the previous calculation, and you divide that by the usual hours. That gives you a figure of £1,159.55. Again, you'll see that's not 50% of the £2,400. So the employee is losing out here on their furlough pay by about £40. Again, this swings and roundabouts. In the month of August, they'll probably get slightly more than 1,200. So don't forget about the national insurance and pension contributions. I've put a quick calculation in there. I'm not going to run through it with you, but these calculations have changed under the flexible furlough arrangement. You take the amount that the employee is going to be paid under the furlough arrangement, and you deduct from it the relevant caps, the secondary threshold for NRC, or the lower level of qualified earnings for pension contributions, which again have been prorated by the number of hours furloughed divided by the number of usual hours. So these are going to be different calculations to that which you would have done previously when working out furlough arrangements for furlough calculations for those who have been fully furloughed. So just bear in mind, you're going to have this kind of change. You might have some employees who are fully furloughed and might have some employees who are flexibly furloughed. So you're going to have to work out the different calculations for each. There are some future changes again that come into effect post-July. So from August, employers will have the ability, would not be able to recoup the national insurance and the pension contributions. And from September, the furlough grant will reduce from 80% down to 70%. This goes down a further 10% from October. So we will see the furlough grant fall to 60% of the relevant earnings, and the scheme will close at the end of October. But as far as we're aware, and the legislation has been announced, for this whole entire period, you can be on a flexible furlough arrangement. So there is this tit for tat with the government, but in essence, it's helping people bring back employees slowly and forcing you, in essence, to cover the other bit, the bit difference. What I would say is in September and October, when you see the grants reduce, you as an employer will have to top up the remaining 10% or 20% in October so that the employee continues to receive their 80%. So to give you an example, if you're 80% based on the government's previous example, it's 2,400 for the employee. In September, you would have to make sure that they receive the 2,400, even though your rebate is going to be, say, 2,100. And again, in October, the same thing applies. The employee must receive the 2,400, and the grant, the rebate to the company is going to be the 60% or the reduced amount of that. So there's lots of questions around the flexible arrangements, some of which have been sent in advance. We'll go through some of these, and please do ask more, and I'll answer those in a second as we can. We've got plenty of time to go through your questions. So the first one here is given to us by Andy. As employees return to work, what is the position re non-discretionary overtime payments? If they're paid overtime at rates set out in the contract for extra hours worked over their 7 hours a day, does this impact the furlough claim? Now, this is a really interesting question, and some real thought behind this. So if your employee is working non-discretionary overtime, then in essence, that counts towards the number of hours they've worked in that month. So when you work out your furloughed hours, you take the usual working hours, which is a total number of hours they're entitled, they should be working in that month, 178 from that previous calculation, and you deduct from that the worked hours in that month. So just because an employee has worked overtime, it still counts as an hour's worked, and therefore reduces the number of hours you can effectively claim under furlough. In essence, the employee is not going to be any better off from working those extra hours, aside from the fact that under working those extra hours, they will have to be paid their full salary, as opposed to that 80% or reduced furlough amount if they're being capped. So they're not going to get anything over and above their normal salary. It's unlikely that someone is going to receive money in excess of their standard salary under this arrangement. But there's two things to bear in mind. One is that those employees who are working non-discretionary overtime are likely to have worked non-discretionary overtime in the past, and therefore, when you look at their average hours worked, you'll find that when you divide that over the last year's worth of work, they'll probably be working more than the 40-hour week. They might have a 42 or 43-hour week on average, in which case their usual hours worked for the month is going to be higher than that 178 we calculated earlier. So they're already starting with a position where they are entitled to more furlough hours. So when they work that overtime, they're just eating into that. So again, it's not going to benefit the employee really, it's going to benefit the company in terms of the furlough rebate, but it's something to bear in mind. The other thing that you can do in this instance is you can give a discretionary bonus to an employee. Discretionary bonus could be a way to top up their pay so that they receive at the end of the month more than what they would have done under the flexible furlough arrangement. The second point here is we called one of our employees who was furloughed and asked the location of a software program that we needed. The employee said that he couldn't tell us the answer and he wasn't supposed to be doing any work that would allow the company to make money. Were we wrong in asking this question? Not necessarily to do with flexible furlough, but this is a very valid question which has come out a lot. What can or can't you do whilst an employee is on furlough? Now, the rules state that an employee cannot do anything that's going to generate money or provide a service to the company. Now, they're quite globalized rules, they're quite broad, but we would expect something that generates money, that's clear, defined. If you're doing something that is physically going to create money for the company, that's easier. I would expect things which are indirectly creating money, for example, finding a software program which a company is going to require to do their work, is not necessarily generating money. It could potentially be decided as providing a service to the company, but providing a service, again, I would expect that to be providing a service such as marketing, HR, administration. Locating or providing the location of a software program is not doing anything that you would, in essence, pay a third party to do for the company. You're not providing the service to the company. You are effectively just communicating with management. And communicating with management, communicating with your staff is allowable under furlough. Otherwise, how would you arrange for them to come back? How would you discuss with them what's happening with the business? You would need to be able to communicate with your staff whilst on furlough, and this is purely communication. So I wouldn't say that you were wrong for asking them. That is completely justifiable, and if the revenue were to question it, you've got the justification there. I do not believe that asking someone to provide you a location of software would be equating to working. Going to the next point, if employees are not working some of the days, do they still receive the same amount of furlough they were getting previously? For example, if they work 3 days and the company pays them for those 3 days, the other 2 days are not working, will be furlough pay, and is it the same amount of furlough they're already receiving? So, kind of lots of questions in here. In essence, the 3 days they're working, they are entitled to their full salary, unless you have permanently, and this will have to be by way of contractual agreement with the employee, permanently reduce their salary. When they are working, they're entitled to their full salary. The furlough agreement, the original furlough agreements, were not permanent reductions in salary. Again, you might have done your own agreement around this and you might have permanently reduced it. but they were not intended as permanent reductions. So when they come back to this flexible working arrangement, the days they work, they're entitled to their full salary at the 100% figure. For the period that they're not working, they're entitled to that 80%. And again, the furlough rebate is what the company gets. It's not what the employee gets. The employee is getting the, it's the minimum of what the employee gets. The employee must get the rebate, and you can choose to pay them more if you wanted to pay them more. You can top them up to that 100% level if you wanted to. But the employee is getting that calculation based on the previous slides. Now, you'll see that the furlough calculation comes to slightly less than what they should really be entitled to in the month of July, and slightly more when it comes to the month of August. That is the minimum they're entitled to, and that's usually based on your contract that you agree with them. That's really what they're going to get unless you decided to top them up. So yes, the employee won't get the same as what they would have got previously on that prorated version, but obviously they're still getting paid, and this is still going to be something to support them whilst we're in this tricky period. So that's all the questions we have in advance. Joe, do we have any other questions?
Yes, we do, Ben. Okay, so we've got there's a note here from Kay. August is 31 days. Do you mean September will be different?
No, August specifically, because August is 31 days, so the calculation is going to be the same. Your number of usual working hours is the contractual hours divided by 7 times by the number of working days in the month. So if we go back to our calculation, you'll see that the number of hours, the usual working hours for August will be 178. But you'll note that the actual calendar days in August are 21. So on an 8-hour day, you're looking at 168 would be your effectively working period for August. So when you actually go and do the furlough calculation, the furlough is calculating an extra 10 days in August. So that's the reason why the employee will be better off. Whereas in the month of July, the number of working hours is 23. So working days is 23. So so that is 184 effective hours. So the employee is going to be suffering those 6 hours in the month of July, but gaining those 10 hours in the month of August.
Okay. Another question here, this is anonymous, but once we bring our staff back to work part-time, can they return to being furloughed full-time, or are we committed to employing them part-time?
Again, there's no real guidance on that subject, but as far as we're aware, the furlough arrangements are fixed in place, so you can bring people back and put them back on furlough as and when you like. Whether it's flexing between part-time furlough arrangements to full-time furlough arrangements, there's no real guidance on that, but I would expect that once you put someone on a part-time furlough arrangements, that they effectively stick on that. Because otherwise you're going to have to go through the principle, the whole format of getting an agreement with the employee, agreeing them to go onto this part-time furlough arrangement, bringing them back, putting them back onto a fully furloughed arrangement, which will require a new agreement, and the arrangements require different agreements. So if you're going to go down that route, you may be able to, but just bear in mind that it's probably easier just to keep someone on a flexible furlough arrangement and just and vary the terms of that arrangement.
Okay. And a message here from Kay. Please confirm we can claim NI and pension, the 3% in June and July, but that stops from August. That's
correct. So in June and July, you can claim the furlough and pension on the NI and pension contributions on the furlough amount. The calculations change, as I said before, but you can claim that during June and July. You won't be able to claim that from August onwards.
Okay. A fairly long question here from Harry. Let me just read this out to you, Ben. So if I understand this correctly, it means that for each employee who earns above 37,500, we will have to pay for some of their time. So we might as well make them work for that portion that we have to pay for either way, with the higher salaried employees working longer. for each employee, we therefore need to work out how much of their time, up to 2.5k per month, pays for, and make the work the other portion. Is that the right way to think about it? Might be difficult to digest that one.
All right, so I'm assuming this relates to the period after, well, from September and October, where the furlough rebate reduces. So looking at September as an example, the furlough rebate reduces 70%, and the employer has to top up with 10%. So in that instance, if an employee is on furlough, using the example we had before, let's say it's £2,400 for the full period. The employee is paid £3,000 for the full period. They're entitled to £2,400. So they are, but the furlough rebate in that instance would be £2,100. So the company would have to pay the employee the £300 difference, plus the NI on the full amount and the pension contributions on the full amount. So it's going to cost the company, let's call it £400, to keep that employee on furlough for the month of September. Mm-hmm. Now, if you were to bring them back for a proportion, it's just the proportion of that amount which you would then have to pay them fully, and they would be working for. When they're not working, you would still have to pay that extra 10% top up. So is there any benefit of bringing employees back? Well, the cost of an employee for the full month for you to bring them back, let's exclude the NI and pensions here, is going to cost you £3,000. Whereas having an employee on furlough for the entire month is going to cost you £400. Mm-hmm. £300. So there's a big difference between the £300 and the £3,000, and it's up to you to find that middle ground of what works well for you.
Okay. We've got another question here, Ben, from Andy. Said he missed part of what he said re part-timers. So if work, say, 3 days per week, what is the standard calculation? If return 1 day per week, what is the calculation? Could you clarify?
So it's not done by how many days you work in a week. It's done by how many hours that employee is working throughout the entire month. So if you're looking at bringing back an employee who's going to be working 2 days a week, so let's say 2.5 days a week, it's half a week. Going back to the government example is a good starting point. That 2.5 days a week will equate to 92 hours in the month. So you deduct the 92 hours from, so you keep with your usual working hours, which is the 178, based on the contractual hours of the employee. You deduct from that the hours worked to work out the furloughed hours for that month, which is the 86. So the employee will be paid for his 2.5 days a week at your normal salary, in which case, when you're working out what the employee's salary should be, there's a few ways you can calculate this. You can either calculate this on an hourly basis and use the similar calculation to the revenue, but in reality, for those who are on a fixed rate, you're probably going to prorate their salary. So if they're working 2.5 days a week, you're going to say that they're entitled to half their salary, or their usual salary per month. You could, however, as I say, look at the actual number of hours they've worked in that month and work out what their hourly rate was and do it that way, kind of down to you in that basis.
Okay. And another question here, Ben. I guess this relates to if you're a director of the business and furloughed yourself, but sending off HMRC statutory reports like P11D, presumably this is not regarded as working when furloughed, otherwise you'll miss your HMRC deadlines, and also things like completing VAT returns. Yeah.
So one of the things that that the revenue have highlighted when you're furloughing a director is that the director can still continues to adhere to their statutory requirements. So if a director is furloughed, they can still file accounts, still file VAT returns, still submit the P11D. The question is, and this is a very tricky area, whether the calculations to prepare the VAT return, the bookkeeping that might be required, or the calculations to create the P11D forms, whether that would be constitute as work. And in my opinion, I think it would. However, if you were appointing to an accountant to do it on your behalf, and just spoke to them and said, can you do this for us? That would be adhering to your contractual, your obligations as a director, and all you're doing is communicating with a third party in that instance. You're not providing a service to the business.
So what would happen in the case that you've got a full-time or part-time bookkeeper? Can they do that work?
Well, exactly. A bookkeeper could do that work. As to say, the bookkeeper can prepare the VAT returns, do the bookkeeping for the company, but that person could not be furloughed because they're providing a service. If you've got a third party doing it, like an accountancy firm, then again, you don't have to worry about furlough. You've got that contract with them and they're doing it for you. But it's again, you'll find a lot of this we're going to come out once the revenue start inquiring into the furlough submissions. But you might find there'll be questions from HMRC if you decide to furlough, if you decide to keep your bookkeeper, your employed bookkeeper, employed, paying them a salary to do the bookkeeping and the VAT calculations, but furlough yourself as a director because you're not doing any work in the business. The revenue could question that judgment, because how is that employee getting direction if you as a director are on furlough? There could be arguments for it, arguments against it. We'll see whether that's going to be allowable as and when revenue really question these furlough calculations and submissions.
Okay. Well, I think that brings us to the end of our questions there, Ben, unless there's anything else you've thought of that we need to cover before we finish.
No, I think that's all the questions here, and there's nothing else from me. Okay. As always, if anyone has any questions or comes up with anything that they want to ask, which is later on, or just didn't find the time to do it during the presentation, please do drop me an email. I'll be happy to answer your questions, and hopefully everyone found that useful.
Thanks very much, Ben. As with all of our webinars, we will make a recorded version of this webinar available on demand. So everybody who's attended, you'll be sent an email with a link to that. We'll also make it available on the Grunberg & Co website as well. Thanks very much, Ben.